At Option Genius, we believe that you deserve freedom, financial freedom, so that you have no more worries and more than enough money. Time freedom, so that you could do what you want, when you want to do it. And choice freedom, to live your life on your terms. But the system and Wall Street are rigged against those little guys. So how do we fight back? Well, my friend, that's what this podcast is all about. My name is Alan Sama, and this is the Option Genius Podcast.
Passive traders, let me welcome you to 2021. One of the resolutions this year was that I was going to have a podcast episode every week. But this is the first episode of the new year, and you are probably listening to this in February, which means I am behind, and I apologize. I'm going to do my best to make it up and catch up and have at least one episode every week, if not more, depending on what's going on in the markets and whatever lessons I need to impart. So hopefully we'll be able to take care of that and catch up. I wanted to say thank you for having a wonderful 2020. Corona aside, that impacted everyone's lives to some degree. Those of you who lost people, I'm greatly sorry and my condolences. But when we look at the market and overall economy, not the economy, but the stock market, the economy and the stock market are two different things. We learned that in 2020. The returns and the investments that we made in the markets and our options trades did amazingly well. Amazingly well. I don't know if we're going to have another year like that anytime soon. Passive trading just kicked butt. All of the strategies worked amazingly well. We have students that didn't have a losing trade all year. As hard as that to believe, I know I had losing trades, but they showed me their results. And it's like no losing trades the entire year, and they're doing fantastic, and they've continued into 2021. In this episode, I did want to talk about what we can expect in 2021 and how we can make money from it. So, 2021 started relatively calm. We didn't have any issues with the inauguration. Biden took control and Trump left peacefully. No big deals, no riots, no coup, no nothing big. I mean, we had that little issue at the Capitol for a day, and those guys were beaten back and they left, and now there's investigations and all that going on. But, government seems to be running smoothly. The Democrats do have control of the Senate and the House. In the Senate, they have a 50-50 with the tiebreaker, so they can get more stuff passed, but they don't have complete control because a lot of issues, they do need 60 votes in the Senate. So they're going to have to get all of their Dems to vote in that favor, and then they'll have to have 10 Republicans to vote for them. So that's probably not going to be an easy thing for them. That's going to keep a damper on things, meaning that they don't get to pass every single thing that they want to pass, which is a good thing, right? I think when it comes to politics, the less laws they pass, the better. The less they interfere, the better. And I will agree with Trump on that every time they pass a law, they should take out a law. But it is what it is. And as long as we have, one, either the House or the Senate in one control and the other party controls the other one, that's fine. That's great. It works best. And the market does the best in those. And people are normally happier. When you have both of them being in control by one party, things can get really out of hand. The biggest thing for us is the Fed. The Fed continues to keep saying that they're going to keep rates at zero. They're waiting for inflation to come up, and they're expecting more and more stimulus from the government. So as long as the rates are at zero, as long as the Fed is continuing to pump money, markets are going to continue to move higher, as they've done the last several years. We've had a very Fed-induced bull market that has just pushed stocks higher and higher and higher, and we're probably going to continue higher. That doesn't mean that they can't go down in the meantime. We could easily have a 10% correction. We normally get those once a year. Easily we can have one. We're due for one soon. Does that mean it's time to bail? No. Maybe you take some profits, and then if it calms down, then maybe you get back in. You buy the dip. Because as long as the Fed's keeping rates too low, there doesn't make any sense for why the market will not go up. We also have the Democrats and Biden pushing for more stimulus and more unemployment coming. So that's going to go towards people that are sitting at home, and a lot of these youngsters have decided to put their unemployment checks and their stimulus checks and go gamble in the stock market. And so we have a lot of speculation, a lot of pumping of stocks, a lot of like what they used to do in the penny stocks where they pump and dump. That's going on right now with GameStop and AMC and all these other stocks that are just jumping up for no reason. The beaten up names like those, they are going to continue to be volatile. I don't expect similar things in other companies, the cruise lines, the airlines, all those companies. If there is a small chance, that a beaten up company or a company that's about to go out of business is going to turn around or have some good news, there's going to be somebody to pile it in there, and then they're going to promote it and say, hey, this is great, buy this, buy this, buy this, and then the stock will rally. So just keep an eye out for that. Doesn't mean that it's a bad thing necessarily. It's part of the way the market works. Of course, overcorrections or whatnot, it's fine as long as the hedge funds don't get killed. I'm happy. Or if they do get killed, I'm still happy. The only time I'm not happy is when they get killed and they have to dump all their stocks, which leads to a few down days in the stock market. A lot of times in the history, financial news doesn't cover it, but if the market goes down 3, 4%, 5% in a couple of weeks, or in 1 week especially, it's because there was some very large player that blew up and they had to sell everything in order to satisfy their margin calls. That might be going on right now as we speak. Market was down today, and it might be because of that. So we'll see. Now, what's going to do well in 2021, right? Well, you take a look at the agenda for Mr. Biden. The environmental names should continue to do well. So who's that? Well, the electric companies, the EV companies, anything related to electric power, wind power, solar power, and all of the solar names. So there is a ETF called TAN, T-A-N, which covers them. I own that. It's done amazingly well in 2020, and I expect it to continue to go up as long as Biden is pumping more federal money into alternative energy. I believe the cannabis companies are also going to be doing well, the marijuana companies. They haven't done well that launch for the past few years, but the Democrats are more favorable towards marijuana and making it legal. Maybe there's a push to make it legal nationwide. I don't know. We'll see. I don't know if they have the votes to approve that or get it passed, but they'll probably be relaxing some laws and make it easier for these companies to do something. So that's definitely going to, if anything changes in that regard, these companies are just going to shoot up super high. Infrastructure companies are also going to be doing well. The companies that build the roads, pipelines, all that kind of stuff. Caterpillar is one, United Rentals another one. That's a good, quick way to get jobs and people back to work is to start building stuff. Looking at building, home builders and construction companies going to continue to do well. Home builders, usually they stay in the suburbs, and that's where everybody's moving to. There is a shortage of homes in the suburbs, and so they are doing really, really well. Lumber prices are through the roof, right? But that's because there's so much demand. And with rates so low, people are going to continue to be moving to the suburbs. People are leaving California, they're leaving Texas, they're leaving all these states that have very high taxes, and they're moving to places like Florida and Texas and Tennessee, which have zero state tax, and land is plentiful, and there are plenty of cheap properties here. So if you've been thinking about moving to Texas, come on down. Water's fine. It's hot as hell. But other than that, if the mosquitoes don't get you, you'll be fine. What's going to suffer is, I believe, the REITs. So if you have a REIT, it's probably not going to do well, probably going to drop, and they might even cut their rates or their dividends. Office building REITs aren't going to suffer. Urban development REITs are going to suffer. People, the REITs that focus on properties inside major cities and the malls are going to continue to do poorly. I just went to one of the biggest malls in Texas, or not Texas, but in Houston, and there was nobody there. Weekends are pretty busy because we have a lot of people coming in from Mexico to Houston. But with Corona, they've closed the border down again, and so there's less. There's still people coming, but there's less. Weekday, man, that place was dead. There was nobody there. I don't know how they're paying the rent. But those are going to suffer. The stocks that shot up in 2020, the work-at-home stocks, I believe they are going to suffer because they're going to be tapped out. There's not that much more demand for something like a DocuSign. And most people that were going to start a Shopify store or, something like that, they've already done it. And they're going to realize that it's harder than it looks, and they're probably going to lose customers because people are going to quit. When they were all excited and I'm going to work at home, I'm going to open my own online business, and I'm going to go open a Shopify store. Okay, great. And then it takes a few months for you to realize that it's not that easy, and Shopify is expensive, so I'm going to shut it down. So I think Shopify and DocuSign and those type of companies will do bad or do poorly. Not poorly, I guess, but not as well as they did. And so the stocks are not going to rise. The unknown, really, healthcare. Healthcare is an unknown. We don't know how they're going to react. Some of them are going to do well because of the vaccine rollouts. Others are not because there's a shortage in drugs. There's a shortage in pills. And so if they can't sell their pills, then they're not going to make a lot of money. Also, oil companies. That's a strange one, right? Oil companies are unknown, yeah, because oil is trending higher. Oil dropped considerably, and then since the drop, it's been going backwards up to 60. And at $60 a barrel, a lot of oil companies, they make money. So oil companies, I think, will do well, better than they did last year, even with the headwinds. The reopening trade itself, like I said, I think that's going to continue to suffer. And the reopening trade is basically cruise lines, airlines, travel companies, entertainment places. All those places are going to continue to suffer because Corona is not going away. We're having the vaccine rollout, that's fine, but Corona itself is not going to go away, and the new variants and the new strains that are coming fast and furious. It's not just one Corona, it's several Corona, and then there's one from South America, there's one from Brazil, there's one from UK, and then who knows, we might have some of our own. So yes, the drug companies and the makers of these vaccines are going to have to stay on top of this, and they're probably going to have to start changing the vaccine and make us take more than one vaccine. So that's going to be a very interesting scenario where, oh, you got the vaccine from this company? Okay, great. Well, now you got to go and get it from this company too, because this one doesn't cover from that and this doesn't cover that. And, we're not out of the woods yet. Overall, though, it's still a stock picker's market. I've said that last year. I said it over and over again. Every stock did not do good. The markets themselves overall did well because they were carried by certain stocks. Every stock did not do well. It's going to be continuing. Some stocks are going to be trending higher. Some stocks are going to be in the toilet. Some stocks are just going to be going sideways, and some are going to go up, and then they're going to go down, and they're going to go up, and then they're going to go down. Most of them should rise until the Fed takes away the punch bowl, until the Fed starts making comments. They start changing when they have their meetings and their posts and their speeches. When they start changing their vocabulary, that's when things are going to go south. And if the market gets spooked, and if they think that the Fed is going to start raising rates, as soon as that idea takes shape, we are going to go straight down. And it might be more than 20%. It's not going to be very pretty because this move higher has been really, really extended. Probably never like this anything happened before. And everybody's talking, oh, are we in a bubble? We in a bubble? We in a bubble? Well, if you're talking about a bubble, then you might be in a bubble, right? And it's an artificial bubble created by the Fed, and they know it. And they're looking for it, and they're waiting for inflation to increase. Well, inflation is already here, right? Oil prices are up, food prices are up. I don't know what the hell they're looking for or why they haven't noticed it, but they're going to see it. They're looking at unemployment. Unemployment is still there because of the virus. Unemployment is going to stay there for a while. So I don't know where this goes. I don't know if they're going to be able to have a smooth landing. The first time they had QE, and after all that Great Depression, Great Recession stuff, Janet Yellen was in charge of the Fed, and they kind of had a smooth landing. They were doing a lot of quantitative easing, but then they started taking it away. She's now in charge of the Treasury, which might be a good thing because she's had experience with this, and she might be able to help the Fed if there are any issues. So that's positive. But if we see something like that, then definitely I believe the market is going to tank. And so until then, we're free to enjoy the spoils and have the market go up. When that happens, put some hedges on very, very quickly. Get out of your bullish trades, lower the load, cut back on some of your positions, and then just wait and see what happens. And eventually things will recover, and we will continue to be selling options on our positions, and we will continue to do well. We just might have some hiccups this year coming up. So beware of those. Expect the hiccup. Don't expect to be making money every single month. Expect hiccups to come, and that will keep you on guard and vigilant. Now, that's it for my 2021 promotion or predictions. I do want to thank everybody that turned out and supported us for the live event that we had a couple weeks ago in January. It was amazing. We had a lot of fun. We had a lot of people show up. It went off beautifully. I was, nervous and scared, and everything went wonderfully well. I mean, the second day in the morning before we got started, we actually lost our internet in the office. That kind of freaked us out. We're like, oh no, we have no internet. No, what are we going to do? But then, 5 minutes later, it hopped back on and we were able to start off without a hitch. So that was wonderful. We got overwhelmingly positive reviews and comments from everyone that attended. So thank you so much. Thank you for that. I really appreciate it. And people have been asking, when's the next one? When's the next one? I don't know. So far, I don't have plans for a next one for high probability trading that we did. But I do think that I would like to do one for futures options. So, maybe we'll do a 1 day this time, basically cover futures options and why they're important, why you should be looking at those as a good way to diversify away from stock options. You don't have to leave completely, but I believe there's a lot of, that's the new untapped market. And so, a lot of speculators and stuff are really coming in to the stock market game, but in the futures market, it's wide open and we just have to go in and take advantage of it. So I think I'm going to do a 1 day live event training on futures options and how to trade them and what to look for and the differences and the pros and cons and all that stuff, how to get approved and whatnot. So if you're interested in that, please let us know. Send us an email, help@optiongenius.com. We'll put you on a waiting list. We don't have one now, but we'll put you on it and we'll let you know when that comes. In the meantime, I hope you have an amazing year. Merry, happy New Year's to you and your family. I hope you have another great year. Stay vigilant. In terms of trading wise, it should be a good year, but it might be a little bit rocky. Other than that, I'll be here. So if you have any questions, you can always email me and we will trade it together. All right, take care and remember to trade with the odds in your favor.
Are you ready to get started with passive trading and be a consistent and confident and profitable trader, generating cash flow consistently from the stock market? Well, I have some great news for you. For a limited time, we are offering my new book, Passive Trading, for free. All you got to do is go to passivetrading.com/free book, and we will send you the book in the mail for free, as long as you cover the postage and handling. So if you can cover that, we'll send you the book for free. We've already printed it. We got it for you. We're going to send it out to you. It's free. All you got to do is just go to passivetrading.com/free book and learn the basics of passive trading. Get the behind the scenes, get some examples, learn the strategies, and put this stuff to work in your life right now. Remember, go to passivetrading.com/free book and get yours now while this offer is still available.